Okay, this video goes out to all of you who have done the same thing for the last 2 or 3 decades, which is hold 20 predictable stocks in the Australian stock market, which includes things like the 4 banks, CSL, BHP, Rio, Telstra, Transurban, Woolworths, Wesfarmers, Coles. If you're still doing that, let me give you a chart of the ASX 200 versus the S&P 500. Now, the only time in recent history that the ASX 200, the Australian stock market, has outperformed the US stock market has been during the resources boom from 2003 to 2008. That's when China was building Brisbane every 3 months, and they were buying goodness knows how much iron ore and coal, and the government revenues were making politicians like Peter Costello and John Howard look like heroes. When money's coming into a country, all politicians look like heroes. And as you'll see after the GFC, when everyone ran out of money, all the politicians got turned over. So it was a boom period, 5 years in Australia, where China was buying our iron ore, government was wealthy, and the Australian stock market went up, and it was driven up by stocks like BHP and Rio and Fortescue and the resources sector. And that wealth also helped every other segment of the Australian economy as well. So in order for you to think about being in the Australian equity market, we need a resources boom, all right? We're not in the middle of a resources boom. Chinese GDP is slowing. And if it wasn't for a falling US dollar this year, commodity prices wouldn't be going up as much as they have. And this is not about gold, by the way. This is about why Australia as an index outperforms. And the only times are when there's a resources boom. And there's really no other time except if the US market falls over, which in 2021, 22, 23, the NASDAQ fell 37.8% because if you remember, the Fed had got it wrong on inflation. They said it was transitory, it wasn't, and they had to rip interest rates up from 1% to 5%. So when the NASDAQ falls over, our market will outperform, but it didn't go up. So there's a difference between making money and outperformance. So the only time you make money in the Australian market compared to the US market in recent history has been when the resources boom was on. Is that going to happen again? Unlikely. So for all of you who have sat in Australian equities only for the last 20 years, apart from the resources boom, you've been in the wrong market. And let me just point out, since the end of the resources boom in 2008, the S&P 500, try and guess how much the S&P 500, guess how much the ASX 200 has dropped compared to the S&P 500 between 2008 and now. 10%, 20%, you think we've underperformed by 20%? We've underperformed by 72.9%. So if you have sat in the average Australian obvious stocks for the last 2 decades, just less than 2 decades, you have missed a massive opportunity to take advantage of the US markets. Oh, horror, you may say, how do I get exposure to the US markets? Well, if you're still sitting in Australian stocks, you possibly haven't heard about exchange-traded funds. But thanks to the exchange-traded fund market and the growth in exchange-traded funds, there are now over 400 of them in Australia. And some of the biggest and most popular still the ASX 200 ETFs. Again, I ask, why would you bother with those when you can also buy ETFs that give you exposure to the NASDAQ or the S&P 500 or themes like big tech, Asian tech, other countries, rather than the ASX 200. It is now very easy to get overseas exposure. These ETFs are also diversified, so they're lower volatility than most of the individual stocks you're holding. By the way, CSL fell 15% today, just to make the point that it's not really safe in individual stocks anymore. Everything seems to happen instantly, and when something goes wrong, it all goes badly wrong. So you avoid all the individual stock risk. You can get yourself exposures outside of Australia, which I think you still should, to growth themes, and it's all available through exchange traded funds. So that's what MT20 fund does. We just invest in ASX-listed ETFs, and that served us very well because over the last couple of years we've been able to, or we have targeted overseas markets through ETFs. And for us, buying large individual Australian listed stocks is so 1980s.